let's take a look at some charts on Litecoin for the next bull run. So it's useful to map out some price levels ahead of time if we think there is going to be an extended bullish or bearish rally. One way to do that is to use Fibonacci Extensions, which are subjective. You pick high and low, and it projects levels above the high. You can pick any high and low you want on any time frame. You'll always get an extension. You get a 1618, 2618, etc. It's always good to pick extreme highs and extreme lows, the range of the entire trend. That way you also get the 50% level, which isn't a fib, but it tells you a level that price will often return to. So currently LTC wants to go back to 57, and if it makes a new high, it likes anything around 117. So looking at all these together, you can see 117, previous local high 142, the 2618, 171, a 1618 over here around 207. So these are all just levels to watch on the way up if there is an extended rally and you start to see a drop in bullish momentum. You can say, oh, maybe I should close some of my long here. Maybe I should look for a dip after we hit a wall, that sort of thing. And this is just an example of how to use the 1618. This is a chart pattern. Again, a high, a low, you get your 1618 extension. And that is the minimum expected level for this pattern when the breakout occurs. This was in 2018, 2019 for BTC. So very similar thing for all of these 1618 levels on any range. If you get a higher high, you're expecting at least a push to 117. Something else you can look at is yearly pivots. These are printed on January 1st of every year based on math of highs and lows from the previous year. So on LTC, they're actually not very clean as far as resistance levels. What you don't want to see is us breaking above these levels and then dropping below. That's a bit of a fake out breakout, because if you treat it as a ladder, even here it broke down below the support. If you treat this as a ladder, you can say, okay, here's resistance. If we break it, we're probably going to try to push for the next level. And not only are these pivots actually pretty poor here, but all of the resistance pivots are way above price. So if this does return to the previous high, again, you're expecting this 117 level, 185. So I really like 117 as far as, bullish euphoria beyond 100 psychological level to turn price around, to chill out a little bit. This is BTC, just looking at how pivots operate in general. This is what you want to see. You want to see resistance, 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 and then, breakdown. You want to see support moving up, find resistance, support, support, moving up, just a ladder, right? Just bouncing around, bouncing around. Typically, if we break the R5 on any given year, it's going to be just bullish insanity, which it has been for a lot of these coins throughout history. And as volatility comes down, pivots will condense, and as volatility increases, pivots will expand. Looking at the MA multiplier, so we can take the 2-year MA, and we can say, okay, this is our expected floor. 5 times the 2-year MA is our expected ceiling. And one way we can trade this is we can dollar cost average our way into a long position if price is below the 2-year MA, the floor here, and we can begin to exit our position when it's above 5 times the 2-year MA. So it's actually not very clean compared to a lot of other coins. With altcoin here, you can see there's a lot of price history below the 2-year MA. There's a lot of price history above 5 times the 2-year MA. So the numbers are really irrelevant. It's more about the back testing. So you want to try to find something that's clean on these lows and clean on these highs. And that way you can say with a higher degree of certainty that you expect 175 or whatever it is to be the resistance level. Now you can see these are actually pointing downward. If price does start to pull up, they'll go flat and then eventually roll, they'll curl up here. So right now it's telling you all of this is just the pie zone. And it really hasn't escaped below this 2-year MA for quite some time. The MAs are like this partially because there was this really quick burst of price bullishness, and it's all just been down really since then. And lastly, just looking at a pitchfork, which is a trend channel with specific rules. So you pick a extreme low or extreme high, and then you pick a swing low, swing high, and it gives you this trend channel. Price wants to live in this trend channel, and price wants to return to this median line as often as it can. Currently that's around $100. This will keep moving up obviously over time. It also gives you a time expectation for certain levels for price. So this is your buy zone, this is your sell zone, and this is where price wants to live, like I said. So as long as this channel is intact, the median line is a price point with a high degree of certainty. So if everything's bullish, I do like the $100 level for LTC is the nice psychological resistance. I like 117 based on 1618 based on yearly pivots. The MA multiplier is a lot less convincing because it's pretty noisy. You'd have to retool this a little bit. You know, you want to capture these highs. You don't want to capture something that's above this multiplier for, you know, many months, and the same thing to the downside. You want to be able to snipe the lows, snipe the highs. That way it gives you a higher degree of certainty to enter and exit your positions.